Hey guys, welcome back to the channel. Today I'm going to be talking about the Ethereum resistance at the 20-week simple moving average as well as the 21-week exponential moving average. So on this chart, that is these two moving averages, I have them as more or less a band, and you can see once again that is the level where Ethereum has been rejecting off of, and it's been rejecting off of these moving averages basically the entire bear market. And you can see on this lower high we formed back in March and April actually came up to this level. There was only one candle close above both of these moving averages before eventually coming back down, rejecting off of it, and then continuing lower. And again, you saw a rejection back here in August, and then we came back down by approximately 25%. Now we've had another rejection right up at this level, but do consider that there is no confirmation yet. The weekly candle has about 4 to 5 days before it actually closes. So that's going to be something very important to watch out for here going into Sunday when that weekly candle does actually close. And I really do want to stress the importance of Ethereum getting back above these moving averages. And to do so, I'm going to be looking at the previous bear market where basically what we had was a similar structure where we did come up to this level. We had that rejection, that macro lower high, similar to the one that we had back in March, which was followed up with a pretty steep bear market decline. There was another rejection right here in February of 2019 where the wick actually came up to this level around $168, and then for the close came back down around 20%. So it's a pretty similar pattern where we have held resistance off of this in the previous bear market, and you can actually see that when Ethereum was able to reclaim these, get back above that, it did mark that a significant low was in place, and that low actually held on the later retest back here in March of 2020. So the point I'm trying to illustrate is that when Ethereum actually broke back above these and then flipped it into support on this retest in April, that did lead to a pretty impressive rally, marking from the lows a 340% move. So that was pretty impressive by Ethereum. And the general takeaway here is that getting back above these moving averages can be pretty bullish. And when they're working in your favor as opposed to holding as resistance, that can be very beneficial for the price action. If we look back here in the previous bull market, this is the level that the buyers and the demand started to step in. This is where the price action held as support, and that led us off into this pretty incredible mania peak. And it's pretty similar in this same market cycle where, again, when we broke back above these for the first time in May, again, this is the level that we held as support on several retests, and eventually that did lead us to this pretty impressive peak back here in May of 2021. So I would say in the next few months, this is going to be an extremely important level to watch out for. If Ethereum can reclaim these and then get back above them, holding it as support, then I really think that would start to increase the probability that we do have a longer term cycle low in place. Now, if we're having another rejection similar to that of April as well as August, that could entail maybe another pullback or a retest of some of these lower valuations into the next few weeks. So I hope you guys did enjoy the content and the analysis. By the way, make sure to check out our sponsors. We're partnered with FTX.us, which is a great cryptocurrency exchange. You can sign up with the link in the description below or through my referral code SNOWYCRYPTO and get a 5% discount on exchange fees. As always, I hope you guys enjoyed, and I will see you in the next one.